Welcome back to the episode of my trading vlog, where most of the views come from trading subscribers. If that's you, hit the like button. I want to go on AMC and GME today because it's been a long time, and well, this analysis is a staple of the channel. I started trading at AMC in 2021 as a recovery play after the pandemic. Of course, that really didn't work out so well, did it? Don't worry, I managed to sell with a profit, and I've kind of been forecasting the downtrend for the last few years with a lot of accuracy, which has been really unfortunate, but some people have really benefited from that. Well, I'm going to start again with my Fibonacci extension tools. This is the foundation of my analysis, basically, is identifying when price has made a wave 3, which is characterized as the strongest wave of the 5 motive waves, and when wave 1 support fails, because wave 4 does not move into wave 1 in the motive wave count rules. You're going to see I have bearish reversal labeled at 895, and so we had initial impulse 1, and that's where it ended, at least on the hourly time frame. We had a retracement for wave 2, and it's possible that wave 2 actually formed a triangle through here. Now here's the thing about wave 2. The tendency, which is not a rule, but the tendency of wave 2 is not to form a triangle. And so this was kind of our first hint that, hey, this isn't really wave 2. This is actually wave A, this is wave B, and you're looking for wave C. And as soon as we passed below 895, that was bearish reversal, like officially bearish reversal. And since then, price has declined to 650, which is a pretty significant drop. So if you were to respect that level as bearish reversal, you would have dodged a 26% decline in the price, even if you entered at the peak of A. We're looking probably at another measured move down. 1, 2, 3, 4, 5. So this is, yeah, yet another ABC. So we've got back-to-back ABC waves, which isn't necessarily the worst. It could be worse. And when you get back-to-back ABC waves, you could follow with a counter trend of 5 for a 3-3-5 pattern, which might be kind of complicated, but basically what that does is it establishes generally some sort of expanding corrective form, in which case wave C runs pretty strongly, and that could be very profitable to trade as well. But at any rate, the target for this thing would be 490, and I'm just going to leave that there. This is a target, and in this scenario, bearish continuation occurred here, and I think that's right. I may change this in the future, but I doubt it. Bearish continuation, and of course, price has fallen through there and continues to drop. It looks like we were in another small trend through here. And again, just do the trend analysis. And as soon as that downtrend breaks, we can say, hey, maybe now we're actually in correction. And that's the truth, is we definitely are in correction through here. You can see that there's some sort of broadening pattern forming right here. Here are the scenarios. If price can make its way back up to the upper trend line, we have what's called a partial decline, where the price failed to completely cross the pattern, and this tends to be a bullish thing. If that does not occur and we see the price continue to drop, then we're going to be watching for not necessarily a breakout at that time, but we'll be watching for a counter trend which will form a partial rise. Okay, that's a bearish thing, and basically what we're doing is we're just seeing if the price can get through that medial line of support or resistance, and that's it. But this is starting to look like a clean chart pattern through here, and so this might just be the way to trade it. It really could just be the way to trade it. And if we do get a breakout from here, I'll do the chart pattern analysis and follow the price from there. This is basically a fantastic example of a complex measured move down through here, where maybe we've seen A, B, and C, X, A, B, and C yet again, and now we're starting a counter trend. We're breaking a downtrend for certain. I'm going to zoom into the hourly time frame, and we'll just take a peek here. I mean, this was a weird thing to watch. It really was. I think, which is the lowest low? This is actually the lowest low through here. Not many chart patterns, just a lot of corrective waves, a lot of waves of 3, just over and over. It's amazing to me to see so many corrective waves back to back to back to back to back. It makes it incredibly difficult to count and to forecast, and you just got to zoom out until you find a pattern that's worth analyzing, really. And so I'm going to come down here, and we're going to start probably we're going to start the analysis after whatever this thing was right here. There we go. Let's see. That thing right there. Let's get going. 1, 2, 3, 4, 5. One or, oh, not B. I'm sorry. Wave A. Derp. Wave B is corrective. And that's what follows. You can see that uptrend breaks and we enter correction. And something I want to do too is show really quick how wave 4 broke this uptrend, and then wave 5 regained it. See, this low here would have drawn the uptrend, and wave 4 tends to break that, and wave 3 anyway. So I don't need to go into this too much. There's a lot here. This is a beautiful motive wave. That's all I gotta say. After we have finished this correction, we're looking for another motive wave count. We've got it. We've definitely got it. I can already see it. I want to be wary though. Ooh, that looks like ABC, and I say that. Ooh, okay, so GameStop's at a critical level of support and resistance right here. I'm gonna do this. You know how I'm always using the top of the initial impulse to show bearish continuation or bearish reversal? It's because wave 4 cannot move into the range of wave 1. And so at the top of wave 1, I mark bearish reversal. What this does is it establishes that we're no longer in a motive trend, we're actually in a corrective trend, which could be the case here, even though we set a nominal high. If this is 1, 2, 3, 4, 5, that's great. Then this is actually all of wave C and we're done. If it's not, then we've got 1, 2, 3, 4, and 5, and wave 4 here is dipping into wave 1, which is not what you want to see. So we're probably not actually doing that. Honestly, the length of this trend is starting to tell me that we're still in correction. This is a big wave A. This is probably wave B right here, and wave C, yeah, that probably completes it. Just looking at the time frames, you don't want to be having these disproportional lengths of time in your wave counts. You got to figure out how to make it more or less equal across the board. Now, it's not exact, but near that 25% mark, we peaked, right? Near that 50% mark, we bottomed. Right on the 100% mark, we peaked. There you go. Okay, that's all there is to it. And so we're looking at this corrective trend now. We're probably going to find a low near whatever date this is. Pretty cool, huh? Right? I don't know why that's the case, but for some reason, Elliott waves tend to occur in that fashion, where the time frames also kind of line up a bit. And I'm just going to start putting down some other labels and some important levels to watch. 1423, this becomes bearish continuation. And if we were to do like a pennant analysis or a triangle analysis here, we might be able to. We don't have enough touch points, or do we have enough touch points? Let's see here. Could this whole thing be a triangle through here? No, it doesn't look good. At any rate, that's what I have for today's video. Big AMC, big GME update. I know earnings are coming up tomorrow in GameStop, and that's going to move the price probably above or below one of these two levels, either above 1704 or below 1423, which is going to be a big swing. Price right now is right in the middle of there. I want to leave it at that, and I'll be pumping out more analysis later down the road. Thanks for watching. Happy trading.